These are the key investment opportunities that credit unions or Saccos offer to you as an investor. To begin with, the Kenya Sacco movement is rated number 1 in Africa and number 7 globally. That points at good management and growth in that sector. In Kenya are regulated under 2 statutes or 2 laws. Is the Cooperative Societies Act, which offers regulation on registration, incorporation, and general supervision of Saccos. This statute is domiciled or implemented under the office of the Commissioner of Cooperatives. And the second statute is the Sacco Societies Act of 2008, amended in 2010, and this statute is implemented by SASRA, and it offers prudential supervision of deposit-taking Saccos. In my discussion, or in this video, we narrow down to the quasi-banking services that are offered by the deposit-taking Saccos. So number 1 is equity, investment in equity, or acquiring a stake of the Sacco. This involves a member putting in a specified amount of share capital. A share is a unit of the capital of a company that gives ownership to the holder of that share. It is important we note that Saccos, by incorporation, not registration, by incorporation, Saccos are LLC or enjoy the LLC status. And therefore, just like any other company, Saccos in law are allowed to acquire capital from members of the public. And that's why, because members of a Sacco are owners of that Sacco, that is the reason why every member must own the Sacco by putting in a minimum amount of share capital. By principle, globally, Saccos are member-owned and member-controlled. And another principle is that Saccos exercise equality and equity. For equality, all members of a Sacco are equal, and as such, the law expressly provides that no single member should hold capital in excess of 5% of the paid-up share capital of the Sacco, such that such a member can assume control over other members. For that reason, the law caps the amount of share capital a member can hold in a Sacco to 5% of the paid-up share capital. In essence, you have seen share capital in Saccos increase. The minimum amounts increase over time in adherence to that law, and as such, that is a measure of growth. Number 2, for share capital, a member is allowed to purchase other members' share capital, just like we purchase shares or equities for company in the stock exchange. It's only that we do not have a designated market for shares in Saccos. For that reason, shares in Saccos are purchased or exchanged on a man-to-man agreement, but the transfers are effected on proof through share capital transfer forms within the Saccos. The opportunity of investment within the share capital is that a member can accumulate share capital through trading, buying from other members, giving you capital gain because the share will be purchased at a lesser price or at a lesser amount than what sits in the capital account. Number two, it will give you dividend, come dividend. The word come technically means together with. When you are buying shares from a member, preferably an exiting member, you acquire those shares, including the dividend accruing for the period that these shares were held by the outgoing member. So you are not only buying that share capital at a reduced amount, but also together with the dividend for the period the shares were in the hands of the outgoing member. Then number three, it gives you a passive income over time. The reason why many people do not look at share capital as a worthy investment in Saccos is that most members maintain the minimum share capital, which when subjected to the rate or the dividend rate, the return or the passive income looks a small amount that mostly will look, this is not reliable. But reliability of investment incomes squarely lies with the investor, because irrespective of the high rates of return that are given, the object of the passive income is the amount of your investment. So for example, a member who has invested a million in share capital in a Sacco that is paying a return of 15%, that member will get a dividend of 150,000, which may translate to a minimum of 12,000 per month. That may look like a good return. But look at another member who has maintained the minimum share capital of 20,000 in the same Sacco. This member will take home only 3,000 shillings, which may look unsustainable, but it is the member who did not exploit the investment opportunity in share capital. Investment opportunity number two is the alpha deposits. Why are we calling the alpha deposits? These are specific deposits which have a minimum that a member should be contributing towards funding the Sacco. The reason we are using the name alpha deposits is that because of the quasi service in banking by Saccos in their FOSA, the front office services, there are other forms of deposits that a member will be doing in a Sacco. But for these monthly deposits, remember, by function as a purpose, financial institutions, their main role is collecting or mobilizing savings from savers and availing those amounts saved to borrowers. So we have savers and users of those savings as capital. And that's where we have the saving and credit function in financial institutions. It's only that for Saccos, the amounts saved are not available for withdrawal in law, as it is in banks. But remember, the function in banks for lending is not based on the demand deposits. Banks do offer high yield savings accounts just as Saccos. So the deposits that you are making in a Sacco, that is a high yielding investment that you are making, and is an investment for the long term. The challenge is that most of us, we join Saccos primarily to borrow. But if you look at the structuring of that name, savings and credit corporations or cooperative societies, it is important it gets clear that these enterprises are Saccos or cooperatives because of their legal formation, because of the law that governs their registration and incorporation. But by business model, by function, these enterprises are LLCs, they are companies, and their business model is of financial service provision. And because of that duty to grow the investor or to grow the owner's equity, SACCOs, just like banks, offer the high yield investment accounts or high yield savings accounts. So deposits that we are making to SACCOs, owing to the fact that the responsibility to choose a good, sustainable SACCO relies with you as a member or an investor. Those are long-term savings, high yield savings account, because if you look at the history, empirical statistics, these SACCOs keep on increasing the amount of returns that they are paying. And a good reference point is during the COVID period, when other institutions or companies had little to declare, or many did not declare any dividend, SACCOs paid out returns like nothing much happened to affect their business. The investment opportunity, which may not be an opportunity for investment per se, is the benevolent funds. If you look at the purpose of SACCOs, SACCOs are created, or collective investment schemes created, to promote the socio-economic welfare of the members. The economic welfare is on the savings, the high yield returns in the savings, and perhaps for those who require capital to fund other investments like businesses. For the social function of SACCOs, SACCOs do offer some sort of silent insurance above insuring the loans that are acquired by members. Through the benevolent funds, if a member is bereaved, that is, if a family member of that member, that's a nuclear family, or the parents of both sides, in the event of a demise, these SACCOs pay out a last expense. In the event it is the member, the investor, who has passed on, SACCOs do write off the loans remaining in the books with regard to that SACCO, to that member. And those are the active loans. Then there are final dues that are paid to the specified next of kin to the SACCO. In most cases, these final dues are a multiplication of, or are 2 times the amount of deposits that this member has invested by the time of death. And this facility differs from one SACCO to another, so it's one of the important factors that a member need, or an investor need, to look at before joining a SACCO. Fourthly are the high yield savings accounts that are offered in the front office services of these SACCOs. You have fixed deposit accounts that are operated by deposit-taking SACCOs, and they give good yields, just like the fixed deposit accounts with the banks, and even better than some money market funds devoid of the compounding element. So a member should consider the available opportunities for investment. Then the last one is on borrowing. In the event a member has a need for capital or for money, SACCOs have offered the best borrowing opportunity for its members compared to any other source of loans. SACCOs offer easy application process, easy approval process or appraisal process. They offer available or easy collaterals, either member guarantees. You can use bonds, you can use title deeds, you can use other forms of ownership documents. They also importantly offer low costs of capital, or that is affordable interest rates, effective interest rates. The following will be the differences or the distinctive factors between SACCOs and money market funds.